Iron ore is under the spotlight today for various reasons due to the annual contracts and a big question whether it is a thing of the past. But apart from that, ArcelorMittal says that its current contracts, the terms in the current contracts that they have with Kumba Iron Ore, still very much intact, and they're talking about some kind of surcharge which will be introduced to mitigate against any unforeseen expenses. Give us some insight into that.
Well, obviously, just seen the wires off Bloomberg's and Reuters, etc. What it looks like, obviously, you can't just cancel a contract automatically. So they also have to have some arbitration between Kumba and Arcelor. They'll have to take it to court to see whether that contract actually is finished at cost plus 3%. So obviously, you can't just stop supplying automatically. So I think that's what they're saying there. And then secondly, they obviously feel that they do still have some hold over that contract, and the losing of the rights of the Sishen iron ore mine might not have any impact on the actual contract itself. So we'll just have to wait and see there, but obviously they're trying to fight this push by Kumba to get increased iron ore pricing to Arcelor, and we'll just have to watch very closely on it. But I think a little bit positive for ArcelorMittal. They're still under a lot of pressure, and that surcharge obviously they're going to push on to the consumer, which is not great for South African companies and steel companies that are using the products from Arcelor.
Do you think that we're going to be seeing steel price increases from Arcelor next month?
I'm pretty sure there will be. I think if you saw earlier today, Bhiliton have contracted quarterly iron ore prices, and I think that's going to end up pushing the price of iron ore up, especially as we see some growth coming through from China and through Asia, and a slow economy even coming through from the Eurozone. So I think that steel prices should be a lot firmer going forward.
It was quite a big defeat for the likes of BHP Bhiliton and other miners, of course, of the fact that they were able to convince Japanese steel mills to get iron ore at more expensive prices. In other words, the quarterly price arrangement that will be now made as opposed to the annual contract pricing. How is this going to change the game for the likes of BHP Bhiliton and Anglo American and, of course, other steel producers and iron ore suppliers, of course?
Well, I think coming off a commodity levels where they've been very low, and obviously with the world in recession, I think this is very good for them. Obviously, quarterly prices in an environment where growth is starting to expand relatively off a low base, but obviously as things get better and better over the years, over the next year or two, quarterly is obviously going to improve their earnings much better, because every quarter as growth comes up and as the economy starts to grow, they can increase their prices every quarter rather than once a year. At the same time, once a year you would only have your increase. It would be a very, very large increase. Now for quarterly you'll have slightly more incremental movements all the way through the year. But I think it's very positive for them, and they can have much more control over the pricing that they get, and better pricing in a growth environment. Obviously, in an environment where it's lackluster, that's not really going to make them too much difference for them.
And of course, we know that China has been relatively opposed to such pricing levels as well, because we know that they have been trying to push down iron ore prices, and they have been relatively opposed to moving away from the annual fixed pricing of the past. Do you think that we're going to be seeing more resistance from China, or do you think that they're just going to have to do with what they get now?
I think they'll deal with what they get. I think before, what they'll do is they'll get a decent price at the beginning of the year and bulk up as much as they could on stock. And that would drive the future price up higher, but they'll get a very massive amount of iron ore into holding of iron ore, whereas now with the quarterly prices they won't really be able to do that. And I think it will give a much better and closer view of where iron ore is actually trading. So I think it's good for the market as a whole.
Turning our attention now to Clicks, they came out with the trading update. So they say that diluted headline earnings per share could be up by as much as 25%. What did you make of that update, Rob?
Relatively good earnings. I think they're quite similar to some of the food retailers, which is quite surprising at 25%. I think that they're growing their different stores as well, and the pharmacy is growing extensively as well, and they're starting to get a lot of traction on the pharmaceutical side, and they've reduced their costs as well. So looking very firm for Clicks, and one of the better picks in that sector.
So you'd be buying Clicks at these levels, 30 Rand?
They have moved up quite considerably. The whole market is at a point relatively high, and we have to see if there's follow through from earnings going forward. I think you have to you can't be out of the market, and I wouldn't be shorting them. If you're holding them, I'd carry on holding them. I'll probably pick up a little bit here, but I wouldn't buy my whole lot in clicks right now. They are very fairly priced currently.
Investor coming under pressure today. Last I checked, it was down about 2%, just over 2%. The company has said that it does want to spend 412 million pounds on buying out the rest of Rensburg Shepherds. Clearly, the market looking at this news slightly negatively. Why do you think that is?
Well, I think obviously it's a very big amount of cash. 400 million pounds is not going to be a cash issue. It's going to all be in shares, and therefore it's going to dilute the shareholding for Investec holders at the moment. They'll also be adding about 7.8% of shares, which will also be eligible for a dividend. So that's obviously going to dilute the dividend slightly as well. So I think that the market's just seen how much it's going to affect the amount of shares, and the share price is adjusted because of that. It looks like a relatively good acquisition. They've got 12.7 billion under management and a very solid firm, and they managed to get through a very tough cycle now. And obviously Investec sees a lot of growth potential coming from there, but it is going to be a dilution to Investec shares.
Rob, we had money supply out today, and we also had private credit extension numbers as well. Things not looking that rosy on that front, and it seems that the 50 basis point interest rate cut that we saw last week was warranted on the back of this kind of data. What do you think is going to push the South African market higher from these levels? Because we know it is about economic data coming through in the US. These numbers were basically priced in so far. Are you concerned about what we've been seeing coming through from Europe, or is it basically about the commodity prices that have been rising over the last couple of days?
Well, our market obviously has been moving with the commodity prices. We see big movements, especially in Bhiliton and Anglo American, with the iron ore pricing as well. So those are really generally moving the market as we see it right now. On a local level, the credit extension numbers for 5 months in a row have been negative. They have come from -1% in January to only -0.5% now, so a slight improvement on those credit numbers. What we need really is employment, and that's around the world. We need employment in South Africa to get the consumer spending again. We need employment to start picking up in the States as well. They're still at 9.7% unemployment, and really for this whole recession really to end and get us a big kickstarter is really when you start to see employment numbers starting to pick up and unemployment decreasing. So that's really what we're looking for now.